Hello, my name is Joe Hopkins, owner of Hopkins CPA firm. We do work all over the nation in many different states and do tax resolution, tax preparation, and tax planning. Today, I just want to briefly talk about the 1099-S form. This is where you have the sale of a residence or a business property or investment property, and how is that, reported on the tax returns. If it's a personal property, that's going to be reported on the Schedule D of the 1040 tax return. However, if it's a business property, you're going to report that on a Schedule C that's going to, flow through to the Schedule C of the 1040 tax return, even if you didn't have any income from that property. Same with the investment property. If you didn't have any income from it, you're still going to need to report it, but it's going to be reported on the Form 4797, and you can take care of it there. On the personal property that's reported on the Schedule D that I mentioned earlier, there's a $250,000 personal exemption if you've lived in the house for more than 2 of the last 5 years, and if that's if you're single. Now, if you're married, you get a $500,000 exemption on the cost basis of the house. So let me give you an example. The 1099-S is going to report the gross sale amount that you're getting for that property. They're not going to know the cost basis. They're not going to report the cost basis on your 1099-S. That's going to be excuse me, up to you to document and have documentation as to what your cost basis is in the property. What I mean by cost basis is, if you bought an investment property for $100,000, 10 years later you sell it for $250,000. Now you have a $150,000 gain. You have to be able to prove your cost basis in that property was originally $100,000. Plus, you may have also had some additional investments into that property, fixing it up as far as your, which those additional costs. We're not talking repair expenses. We're talking capital improvements to increase the value and longevity of the property will add to your cost basis. The only other caveat to this whole scenario is installment sales. Installment sales will be reported on Form 6252, and that could be over a number of years. So you're not going to realize the gains every right up front on this. You're going to realize it over a period of years. So if you have for example, a 5-year installment sale, you sell a $500,000 piece of property, they're going to pay you $100,000 every year for the next 5 years. You're going to be recognizing $100,000 of income each year over a 5-year period. So that'll be taken care of on that same form that I mentioned, the 6552. Anyway, please like and subscribe for other helpful tax tips, and we'll get back to you. Stay tuned for more information. Thanks. Bye-bye.